Time to connect then, as always, with Sanjiv Bhasin, who's joining in on the show. And Sanjiv, just wondering, what your outlook is on the fact that there has been those tariffs that have been, imposed on Chinese imports, what the possible implications could be, and the fact that, despite a lot of announcements coming in from the US, we seem to be on our own trajectory. The recovery yesterday too evident.
Yeah, good morning. So, Aman, we got definitely very, very heavily oversold from overbought territory very, very fast. That's the typical trend of a bull market. 22,800 is where we sounded caution and we advise you to take cash. But in 21,800, the risk opportunity now buying becomes much easier. We were ignoring global trends. The US market is at new highs. The Nasdaq almost at the brink of a new high. And yes, this rhetoric will continue because of the US-China relationship. I think this is immaterial given that we are headed in for one of the largest elections, and I think more of the rhetoric is to do with just sounding good. Even if there is an tariff import, then I think it will make input costs for India cheaper. As it is, our reliance on China is lower. We will see what the impact is. There could be a little bit of destocking which can happen in China, and that may lead to little dumping. But I think we are not in any way going to be majorly impacted. On the other hand, the China recovery trade is playing out well. And if we recall, we've been perfect on commodities and metals, particularly. Vedanta new high, Nalco new high, SAIL new high. So no complaints. I think markets are giving you opportunity to be in the right sector and right space, and you will make money.
Sanjiv, hi, morning. Good to have you on the show as always. Just wanted to understand what is it that you're making of the new listing today, which is bound to take place. Aadhaar Housing Finance in particular. Of course, there's TBO Tech as well. But I want to pick up on Aadhaar because, it seems that it's going to be a bumper listing. Even the subscription numbers were pretty high.
Aisha, good morning. I regret I cannot speak on it because our investment bank is one of the bankers, I think. So I cannot comment on that as a compliance.
Sure. Sanjiv, I don't know if you've taken a look at Bharti's performance of late and, of course, the earnings too.
No, Aisha, the stock has been on a tear and rightly so. ARPUs are moving up. But yes, the Africa business is a drag, and that may be part and parcel of the part and part of the course. But look at what Idea has done, Vodafone Idea. Aisha, I've been telling you from 11, 12th. Yesterday it hit 13 and a half. This stock is doubling in a year. And if you want and you have the gumption for a little bit risk, then about time you converted Bharti into Vodafone. I think Voda Idea is here to stay. ARPUs are rising. 4G, 5G expansion is on the card. And there are 2 rate hikes which are coming. You cannot but make money in Voda Idea. As a disclosure, this has been one of our top picks and will remain. And we see 25 rupees coming in the next 1 year.
That's quite a call, huh? Convert Bharti into Vodafone if you have the gumption or not.
Talk about Siemens, Sanjeev. Wanted to get in your thoughts because brokerages are of the view that the clean demerger of the power business is going to be a value creator. You had the numbers and a lot of brokerages giving it a thumbs up, upping the target price, etc. So what's your outlook?
Well, clearly numbers are in line or ahead of estimates, and that is what the whole gamut was, that capex is at a best time in the last 20 years. ABB, Siemens, Cummins, all are roaring. But I think it's all in the price. 70 times earnings, you cannot but expect a lot of more time to be given. Yes, the capex and the expectation and the driving of the power business will generate more, value creation. But I would be wary at these prices. The prices have been far ahead of the actual numbers also, and they priced in a lot. We would suggest stocks like Engineers India, Ircon, which are actually very, very undervalued PSU stocks and which have immense value. And they trade at 1/10 or maybe less of the valuation which there is. And the underlying business remains robust. All the OMCs, the hydrocarbon, electrical cycle, all have part of that. Anything to do with the railways is there. So my call is that these are blue chips. If you hold them, you are sitting on right heap of gold. But if you want to get new entrants, Engineers and Ircon are 2 stocks which we think can double and still look cheap.
Interesting ideas, EIL as well as Ircon. Sanjiv is saying, in case you completely missed the run on cap goods, go for these names because the big boys have already seen a very, very sharp run up. Sanjiv, what about your views on chemicals? Many brokerages are now initiating coverages. The commentary from UPL this time around hasn't been all that convincing, but do you think the time to buy is now? And if so, what are the stocks that you like within the chemical sector?
Correct, Aisha. I think it's very good to be contrarian, because if the money is going into China and the China government is so proactive in both their, specialty chemicals and on the other side, metals, then there will be a huge amount of upside in these stocks. Given that most of the inventory overstocking is over, and if you see, Advanta's listing for UPL, where they have all the chemical, Carnolia, corn, all these are hitting new highs. As is copper. So I think the worst may be behind. You have to give them time, because as you see the commentary from an SRF or an Atul or a Naveen or a UPL, I think the worst is behind. You can only look for second half to be extremely good, and the price points are giving you very good entry, because this business, according to me, it has been volatile mainly because of the underperformance of China. But I think going forward, this could be a real outperformer in the next maybe 1 year. Excellent businesses, excellent companies to buy, include that Aarti also, but give it little more time.
Yep, and like UBS says, the structural growth amid the supply chain diversification is underway. But let's shift gears then and discuss what's going on within real estate, in particular DLF. They had a con call post their Q4 numbers, and they say that they are looking at strong growth in FY25. Let's hear out the management's guidance.
We are clearly looking at a strong growth in the next fiscal, and hopefully targeting a sales guidance of 17,000 crores for fiscal 24-25. The margins, frankly, with the launch of Lux 5 will only expand. That is very clear. In fact, as we have always guided, that our current margins are in the range of the late 30s to 40. And I think post Lux 5, our weighted average margins will clearly be in the mid to late 40s as a combined percentage. And I think that's where we are. If you look at the total cash balance that we have, it's about 6,000 crores, of which 4,000 crores is escrowed in the RERA 70% accounts. So those can be used only for construction and approvals really, and for little else. So practically, while we have a 6,000 crores cash balance, 4,000 crores is in the 70% RERA account, which is not accessible for general business purposes. Yes, the balance 2,000 crores we believe is maybe at least 750 to 1,000 crores higher than what we would like it to be. So I think we would want to eventually have that number stabilize around 1,000 crores. So I think that's a correction that you will see across the next 2 quarters, and hopefully hence that will also result, while having now won the net debt war, the next focus is to win the gross debt war and also get the gross debt down to as near zero as possible.
Okay, that's the take coming in from the DLF management. We already know Sanjeev's views on that. But Sanjeev, within metals, are you willing to diversify and look beyond Vedanta too?
Well, we've clearly been very, very bullish. Vedanta, Nalco, SAIL all hit new highs. You can add an Hindalco. The Novelis listing is a bumper for them. I mean, the whole AB group has had a huge complexion change. If there is one group which is going to outperform, it is the AB group. So we are overweight both. Just now you've hardly seen any value unlocking. Copper is hit a new high, and the other commodity, all the other commodities, they are just at the tip of moving up, and in a capex or cycle where there has been no other play. So you can add an Hindustan Copper. Now I own Hindustan Copper from 35 rupees levels, so no holds barred. But I think 500 rupees is coming in Hindustan Copper.
All right, Sanjiv, thanks so much for joining in and sharing with us a plethora of stocks and sectors that you're looking at closely.
If you like this video, then like, share and subscribe to ET Now.